Okay, so we are looking at ratio analysis. All right. We're going to start with first the profitability ratios. Okay, they're just telling us how good a company is at making profit. Okay, how good a company is at making profit. All right, that's what profitability is. All right. And then these profitability ratios, all they tell us is how much profit we keep from every one kwacha sale that we make. How much profit we keep for every one kwacha of sales revenue. Okay. So this is the income statement for Zambia Sugar 2024. All right. So we're going to calculate some of these profitability ratios and we're also going to interpret them. All right. So the first profitability ratio that we'll be dealing with is the gross profit margin. Okay, gross profit margin. Okay, it tells us two things. What percentage of sales revenue is gross profit? And for every one kwacha we make in sales, how much our gross profit is. Okay, colleagues, this is what this gross profit margin is going to tell us. Okay, so gross profit margin is just your gross profit divided by sales revenue times 100%. Okay, so let's pick a year from this for Zambia Sugar. Okay, so we'll pick the year 2023. All right, we can see our gross profit for 2023 is 2,453,019 kwacha, and our sales revenue is 5,827,704 kwacha. All right, so we're just going to divide these two. Okay, so gross profit 2,453,019. Let's see. 2,000,000 453,019 divided by sales revenue 5,827,704 times 100%. Okay, so we get our calculators. Let's see. 2,453,019 kwacha by 5,827,704 kwacha. Okay, you get 0.42. Okay, times 100%. All right. So 0.42 times 100%, that is 42%. Okay. So we can either interpret it using the decimal or the percentage. If we're interpreting using the percentage, it's basically telling us out of this 5,827,704 kwacha, okay, out of this money here, 42% is gross profit. Okay. Out of this sales revenue, 5,827,704, 42% of it is gross profit. Let me just get. Colleagues, can you hear me? Okay. I don't know what happened there. Yes. As I was saying, we are interpreting this figure we've got for our gross profit margin. We're saying out of this 5,827,704 kwacha, 42% is gross profit. Then another way we can interpret it is for every one kwacha we make in sales revenue, 42 ngwe is gross profit. Okay. For every one kwacha we make in sales revenue, 42 ngwe is gross profit. Okay. Or 42% of the sales revenue is gross profit. Yes, that's how we interpret our gross profit margin. The next profitability ratio is our operating profit margin. Okay. Operating profit, this is the profit a company remains with after it removes its operational expenses. Okay. Gross profit is the profit after you deduct the cost of goods that are sold. That's a gross profit. Then operating profit after you deduct the operational expenses of the business. Okay, so we have operating profit margin. Tells us what percent of sales revenue is operating profit. All right. Or it also tells us for every one kwacha we make in sales, how much our operating profit is. Okay. So it's similar to, the formula is similar to gross profit margin. Okay. It's operating profit over sales revenue. Okay. So if we go to the year 2023 for Zambia Sugar, their operating profit is 1,174,504. Okay. So operating profit, we put here 1,000,000 174,504. divided by our sales revenue. Our sales revenue still stays the same. It's 5,827,000 for Kwacha. Times 100%. Okay, so we get our calculators. We say 1,000,000 1,174,504 kwacha divided by 5,827,704 kwacha. So we get 0.201 times 100%. We get 20.1%. Okay. So the way we can interpret this, we can say, if we use the decimals here, okay, for every 1 kwacha we make in sales revenue, 20 ngwe is operating profit. All right. The other way we can say it is 20.1% of the sales revenue is gross profit. Okay. When you look at this figure, 5,827,704, 20.1% of that figure is your operating profit. All right. Then finally, we've got our net profit margin. On this operating profit, I forgot to mention one thing. Other times you see it as profit before interest and taxes. Okay, profit before interest and taxes. Okay, this is the profit you get before you pay off your interest costs, and your taxes. All right. Yes. Then we have our net profit margin. Okay. This is the profit after interest and taxes have been paid. All right. Net profit margin tells us what percentage of sales revenue is your net profit. Or for every 1 kwacha I make in sales revenue, how much your net profit or our net profit is. And the formula, same, it's just the net profit over sales revenue times 100%. So if we go to our income statement here, okay, this is our net profit of the year. All right. So we have it here, 941,283. What? That's the net profit for 2023. So let me get the number again. It was 941,283. divided by sales revenue. Now with these profitability ratios, I forgot to mention one thing. The higher the better. Okay, it means you're more profitable. Okay, so you want every year at least this is increasing or it stays high basically. So the higher the better for this ratio. Okay, colleagues? If you're comparing between two businesses, if business A has a higher net profit margin or operating profit margin or gross profit margin than company B, then company A is doing better. Okay. With ratios, usually what happens is you'll be comparing either two different years or two different companies. All right. So that you can see how the company is doing. Okay. As director of finance, one of your roles is to monitor the performance of your company. Okay. And you can monitor this performance through ratios. So 941,283 divided by 5,827,704. Okay, you get 0.16, right, times 100%. You're going to get 16%. Yes, so we can say for every one kwacha we make in sales revenue, say 16 ngwe is net profit. Right? Or you can say 16% of the sales revenue is net profit. Okay. Yes.